Hello everyone, and welcome to the DashCast, where we go about trying to find the most interesting people in the world of cryptocurrencies, finance, and business. On this episode of the podcast, I was fortunate enough to have a good amount of time to sit down with my good friend Chris Kacher, who I recently met on my trip to Estonia. To say that Chris has lived an interesting life would be a clear understatement. Starting out as a nuclear physicist, going on to becoming a wildly successful trader, pursuing independent music production, and working towards building out his own asset-based token platform known as Hansa coin, he has done it all. So in this episode, I wanted to spend some time to get to know Chris on a better level, as well as getting to understand where he's putting his focus at the moment. Now, as you probably have noticed by now, the intro music for this episode is a little bit different than usual. Seeing as we're having Chris on at the DashCast, I thought I might as well go ahead and share some of his awesome piano work. This is a piece known as Waterfall. It's a beautiful piano composition, and for those of you out there who are instrumental junkies like I am, I think you'll not only enjoy Waterfall in its entirety, but a variety of other pieces done by Chris. So definitely check out his work after the episode. Our sponsor for this podcast is the Dash Report. For those of you out there who really like what I do here on the Data Dash channel in regards to providing a macro view across all markets, I feel you'll really enjoy what we've recently done with our new newsletter. Inside the newsletter, you'll get coverage on a variety of markets such as crypto, stocks, commodities, as well as Forex trading. And outside of this as well, we'll be providing a variety of services such as bi-weekly webinars, as well as alerts on potential trades and things that I'm watching in the given market. So if you're interested, the link is down below. What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is December 5th of 2018. Well, folks, I hope you all are having a wonderful day wherever you are. And today here on the DashCast, we're very fortunate enough to have Chris Kacher here on the DashCast. Chris, thank you so much for making the time to come on to the podcast.
It's great to be here, Nick.
So I'm not going to be able to do it justice, but Chris has got an extremely interesting background. From the short time I got to meet him in Estonia, I learned that he not only started his origins focusing as being a nuclear physicist, but he went all the way to switching his occupation towards trading and actually worked under the wing of William O'Neill, who's one of the most successful traders in history, and has now gone on to fulfilling full-time in his passion of cryptocurrencies, focusing on the trending space of STOs, or security tokens, and then more specifically focusing in on asset-based tokens. So Chris, definitely we've got lots of things to talk about here today, but I definitely just kind of like to get a little bit of a background on you, because from the short time I got to know you in Estonia, as I do with most conferences, I tend to find one or two people that I just really click with, that really seem to have some underrated knowledge in the space. And you spent some time in cryptocurrencies being a trader in your background, so I'd love to just kind of get a good general summary for everyone else, as to who you are and kind of where you've come from.
Well, my background, my dad is big in music. My dad has composed and performed loads, and I performed my first piece when I was 5. They put me on piano lessons when I was actually 3. And I grew up in the music environment, and music is very mathematical, I find. So when I compose, I see patterns. I don't actually have this, romantic vision in my head or anything like that. It's the most boring, non-sexy way of composing music, but the way it comes out is emotional translation. If I can make myself cry, if I can induce tears from the audience, and I know I've done a good job. Now with stocks, stock charts are, as O'Neill used to put it, human nature on parade. And so human nature tends to repeat itself. So if I see a stock chart from the 20s, and I've studied, being a market historian, I've studied commodities back to the 19th century, and I love price filing action in general, then I can see these patterns repeat over and over again. Bubbles the same. I've studied bubbles going back 500 years. South Sea bubble, the Florida land boom bubble, the Dutch tulip bubble, the Bitcoin bubbles, many of them. And I really love that how the price volume pattern repeats over and over again. So if you know this and you have your risk management in place, then you can actually make a little bit of money or maybe a lot of money, depending on how much you risk, of course. So my background being very analytical in music, and then I was cutting out spot metal prices from the Wall Street Journal, because as I said, my mom was a top grossing broker for Merrill Lynch. And we used to get the Financial Times and Wall Street Journal, and I used to track the prices of palladium, gold, platinum, silver, and do my own little charts on the price movements. So at 11, I was already interested in how prices move and maybe how one can capitalize on them. And then I started into stocks in a big way, and dabbled when I was 12, but in a much bigger way when I was at Berkeley. Then I realized that the nuclear physics degree I was getting, and I was studying under Glenn Seaborg, who's a Nobel laureate. He discovered plutonium and 9 other elements. This was not what I loved to do. I was good at it, but my real love was in trading, speculating. Stocks to me are the most psychological and analytical puzzle on the planet. I don't think I'll ever get tired of the art of speculation, whether it's stocks or cryptocurrencies. So I did a 180 after I got my PhD. And by the way, this was tough because we discovered element 110. We were the first to do it, and confirmed 106, which we named after my thesis advisor, Glenn Seaborg. So that was all newsworthy stuff, made front page in New York Times. And even with that momentum, I knew that this is not my first love. My first love has always been the whole aspect of sizing up companies and understanding not just the fundamentals, but the technical chart patterns. And so when William O'Neill offered me a job, I told all of Wall Street, there were three possibilities on Wall Street for much higher pay. And I said, it doesn't matter about the money. I'll sweep William O'Neill's floors just to get my foot in the door. So that was the beginning of the most incredible dream job I used to dream about working for the guy. And actually the time there spent was beyond my wildest dreams. So, thank you, whatever's out there, for having set this up and lined it up. And then that resulted in triple-digit percentage returns over a span of several years. I had KPMG audit my account because everyone in Geneva, when I went there, said these are impossible numbers. You have to get this audited. So I chose Big Four auditor, KPMG, to do the audit. And from 1996, they started tracking me from the beginning of '96, even though I'd had success prior years, but January '96 to December 2002. So basically covered the big dot-com boom, which culminated in the March 2000 bubble burst, and then all the way to the end of 2002, which is basically the time it took the NASDAQ composite to lose 87% of its value from peak to trough, which is the most it's ever lost in its history. I basically, it was done because most people lost a lot of money. They lost their shirts. Anyone who made money in dot-coms often gave it back by the year 2002. So I could show that, I actually made money in 2002. I made much more money though in 95 to 2000 were my heyday years of getting triple-digit returns every year, and that was always my bogey. If I could do 100% in a year, I know I did a good job. But it's all relative because in '99, not anyone, but many people could do 100%. So I did 581% that year. So it was like, okay, well, I'm still keeping ahead of the pack. Now with crypto, the percentages get mind-boggling because it's all relative, and therefore in a year like 2017, the first 6 months especially, where everything's going up 10x to 100x, my gosh, you better be making quadruple digit returns, otherwise, you need to check your trading methods. And of course, this year, being able to either go short. If you don't short, shorting is not really my thing. I told a lot of people this year to go short starting January 30th when my algos gave a big sell signal on Bitcoin. So I went to cash across all my coins. And I've done that every major market top. It's just what I do. I create these metrics that you saw in my talk in MoonTech. So I create some of the slides I showed were some of the better ones that I used to create a full picture that tells me when to get in and when to get out. And there's only a handful of these major tops to major bottoms in Bitcoin since 2011. They're very rare, but when they do occur, they're very identifiable. Mm-hmm. So I felt that my attitude toward trading is share the wealth, share when I know, because I'm not trying to covet this. I always think if I can teach someone to fish, that means maybe that they send their kid to college, like an Ivy League. You never, they get their operation for their, who knows what it is. So if I can spread the wealth, then I feel I'm doing a good job.
Yeah, to a lot of the points you talked about, Chris, I completely agree. I get fascinated in the psychological game of markets. It's what got me into equities back about 7 years ago. And, it especially got me interested in cryptocurrencies because what's kind of fortunate is that we still live in a very emotional market, seeing as it's very early on. It's still very retail based and there's a lot of speculation. But outside of that as well, towards your nature of compounding returns as well, I think that's very important. If you can keep consistent, that's what I always tell people, not only to keep consistent with hoping every year to make at least around a 50 or 100% return. If you can do that and keep compounding every year, it adds up within a matter of 4 to 5 years because it keeps stacking up and compounding. But outside of that as well, when it comes to crypto, I was, talking back in December, and we were pointing out the same thing. The euphoria period was very reminiscent of previous bubbles, and it's a matter of studying just simply human psychology. And you won't always pick it exactly right, but in that case, you can at least get a general gist of where we are at the present moment. And I think the one thing that a lot of us here in the cryptocurrency space didn't really recognize, or at least I think at least I was arrogant of, is that I thought this time, after about a 60 to 70% correction, it was going to be different. And this time we weren't going to go down 80 or 90% in Bitcoin's valuation. And, I thought, we were just around the cusp of having things like Backed and having a Bitcoin ETF. And even though you and I both agree, as we talked about back at Moontech, we agree these things are coming, but I think what people underestimated is that they take longer to come. And not to mention, it's crazy how things just work. It happens to be that because of this wait time that we're going to have to incur, that Bitcoin is probably going to not only sit around the range it's at now, around 4,000, but may potentially retest 2,000. And I think some of the bears see about 1,000 or something. I know Axel saw 800 or 900.
600.
Yeah.
Yeah, I think that it's fun to throw price points out there. People always ask me in stocks, how high is the Dow going to go, or the Nasdaq? And I use the same line as William O'Neill. I have no idea. I have no clue. As Ed Sekoda, the great futures trader, he's the equivalent of futures as O'Neill is his stocks. Sekoda used to say the future doesn't exist, so what does he know? And I like that, because all I know is on a daily basis or a real-time basis, let's put it real-time, when my algos, when my metrics say this is a big buy point, I pay attention. And I don't know when that's going to happen. I do think that based on the NVT diagram that I showed, the network, Bitcoin network value to transactions value, that number is right now still, it's come down. It's not overvalued, but it's still in a dangerous zone where I think that Bitcoin still needs to let some air out of the bubble. It doesn't burst. Bitcoin's bubble never, as I showed of the balloons and at the present, Bitcoin's bubble just deflates as much as 94% before it reinflates, and it becomes bigger than it did the time before. And in the history of speculation, there's nothing that's done that. All the bubbles I've studied, all the famous ones and even the smaller ones, once they burst, that's it. It's like the bubble, the balloon I popped when I got on stage that Michael couldn't tie because he was nervous. That is just the nature of bubbles. So Bitcoin to me is really a one-of-a-kind thing. I understand fundamentally why this is happening, and that's why the lower it goes, the more viable it becomes. For people who don't trade and don't have metrics and things like that, they can still, I still tell some people, I've told people this over the years, buy some Bitcoin and just don't look at it for 5 years. Whatever you can afford to lose, because there's always that really rare outside chance that, okay, everything goes to zero or something. I just can't see it happening. But, I don't want anyone to put money in that they need. But if they can see that money going to zero and be fine, then put it in Bitcoin and don't look. Don't flinch, don't look, because this is going to be such a wild ride. You're better off, like anyone in 2013. I put my friend Andrew in the Bitcoin when it broke out in October, and it was trading around $130 a Bitcoin, and the thing went up to 1150 really fast. And of course, greed, all his emotions. He's not a trader. He's a real estate guy. So all his emotions kicked in, and he ended up buying and getting top heavy. And then when it peaked and it went down back, it like corrected steeply down to like 750, 800. He started buying it again, thinking he's getting in cheap. But in reality, that was it. That's the run. And from that point on, all you can do is look for the knee-jerk reaction from 1150 all the way down to, I think it was 700. I should have the chart here in front of me. And then it refluxes back up. It often retraces half its fall or more, and that gives you your exit point if you missed. I never sell into strength. When something's going, I let it go, because I don't know how far up something's going to go. And so I always wait for the first major correction that's defined by the price volume pattern. So in I guess it was January of 2015, it had a major, it hit, if it was January, it hit 1150, and the volume was massive, and then it just had this massive correction. And you don't want to sell on that first correction, because it corrected very sharply. I think I'm off on the numbers. It might have even gone down to 650 or something. But you wait for the knee-jerk reaction, because everyone's still piling in, everyone's interested. It's still got everyone's attention. So you wait for the knee-jerk reaction, then you get out. And you can get out in piecemeal, but then maybe your average exit point might have been around 800 or 900, but don't think you're ever going to sell like 1100, without even 1000. I mean, it's so volatile. You should be very lucky to get out around 800 or 900 off one of these peaks.
Yeah, I mean, to your point, Chris.
Yeah, go ahead.
Yeah, I just want to point one thing out. You're right on that. It's interesting, again, to your point of how history repeats itself. I don't have the chart in front of me, but I do remember and recall, as you mentioned, a sharp correction, and then again an attempt to retest the highs. And what you see every time, as you did back in January of this year with Bitcoin, you see a continued repeated pattern where there's a sharp correction. I think Bitcoin went from near 20,000 down to 14 or 16,000, starts to try to retrace upwards after it got support on a moving average, like I think like the 50-day. And again, it makes a lower high. And that's at the moment where you realize, okay, we're not making higher levels or higher highs in this case. It's time to get out. Take this as your opportunity to exit out of the market. It's very liquid. There's still traders and speculators buying at the top. And I think it speaks to a point where, I love cryptocurrencies. I love this market long term and what it really stands for. But the way to trade crypto is when the momentum's right. I know you and I talked about this in Moontech, where you wait for not only your sell signal, and when that sell signal comes, you sell near the top, and you wait not just to pick up cheap bottoms, but you wait for your momentum indicator to kick in. You wait for the buy signal to trigger through your algo that says, look, momentum's picking up. And as we see, crypto goes through these major cycles where things kind of move in a wave, and they make higher lows every time in regards to the super cycles.
Right, absolutely. The transmission's a little bit freezes sometimes. So
no problem.
If I'm slow to respond, it means your image frozen on my screen. That's all. No, absolutely. I mean, January 2015, all my algos. The January 2015 buy point is not the first one. It's not going to be the only one. It was the first one. And of course, I'm prepared to be wrong. I mean, my algos, they happen to be very right on these few tops and bottoms that occur, but I'm totally prepared for me to be wrong, for them to be wrong. And in January 2015, if Bitcoin had actually gone lower in the ensuing months, that's fine, because I didn't go whole hog into Bitcoin in January 2015. It was my starter position. And then over the ensuing months, you had technical breakouts on more constructive patterns within the Bitcoin chart. So then you could add to your position. And then 2016, of course, was more of the recovery. Not a fierce bull market, but what I liked about those years is that you could spot cryptocurrencies that potentially would outperform Bitcoin, because that's what I'm always looking to do in a bull market. And Bitcoin defines the bull and the bear markets. Everything tends to correlate very heavily with Bitcoin. So I was then in those days looking for the next big play. NEO, for instance, actually this is in 2000.
It was ant shares back then.
Yeah, when it was ant shares, June of 2017, the crypto market had a bubble. Ethereum skyrocketed. All these coins went, as I said, 10 to 100-fold gains in 6 months. That's the biggest gain in that time frame in the history of speculation. I haven't been able to find anything that beats that. And NEO was the one, AntShares back then was the standout. It was the one that checked all the boxes. And so even though I was sitting in cash, I put quite a bit into AntShares because it looked good on the chart. So I used my charts to time my entries and exits. And it didn't matter that the crypto bubble had popped or mini popped, that NEO went through the roof. I mean, it skyrocketed something several 100% or something over the ensuing weeks. And then you could take part of that. I always tell people, take some of the money off the table, and then you're going to see maybe other coins that you can buy. And there was Walton shares or these other coins that went to the moon in a matter of weeks as well. So you can keep force feeding. I do this with stocks, especially in the 90s. You can force feed your capital into the fastest horses, the fastest stocks. And when they get ahead of themselves, maybe you take half off the table. And then you find there's always going to be other coins that you can find. In fact, I met with the originator. His name's Dennis Wiedner, and he founded Paranoid Internet. And I love that name because I started back in the day a system I called the Insane Asylum that people would go onto and post messages and things and whatnot. So I like kind of wacky names. But the guy's really sharp, and I love trading stories and information with anyone. I believe open source encourages better information and better trading. So your listeners probably will, any of them who trade, I would tell them all there's three coins in particular that are doing very groundbreaking things. The first one is Dash. Everyone knows what Dash is. Dash was dark coin back in the day. Now that is a coin that allows you to hide your transactions, your profits, your assets, everything. And the Venezuelans are using it to do, run around against the Venezuelan government because they've outlawed the crypto altogether. But they have no clue what's going on, and that's really great. So if someone buys 1,000 Dash, it costs about $80,000 now. They get a masternode, and they get a 6% earnings, 6% Dash added to their, so they get 60 Dash every month. It acts like a DAO. 10% of the Dash. This is by Dash's own programming. 10% goes to projects, and by holding a masternode, each person can vote where the money goes. So you can, this is philanthropically great implications. And the Dash CEO says, the Dash platform is adoption for the masses. And they're going to do a huge update by the end of the first quarter of next year. So watch for it. If you look at the chart pattern, it's one I'm watching for, because when Bitcoin turns around, I think Dash is going to once again lead the pack. That's a coin that my first purchase of Dash was when it was dark coin, and I think my first purchase was 85 cents. My average cost was like $1.84 or something, and then the rest is history. It just went ballistic. And then obviously the thing is that when Bitcoin blows up, everything's going to go down with it. And I think Dash is, like all these other coins, lost 90% of its value from the peak earlier this year. So you don't want to be sitting in it. That you got to sell when it's good. Decred is another one, DECRED. Same thing. If you buy 1,000 of those, and you can get people to pool money to create the 1,000, you get what they call a ticket, and the ticket allows you to take what Decred does is every month they're averaging $20 to $30 million of real money that they're giving to different projects, and as a Decred ticket holder, you can vote, or you can suggest a project where you would like your money to go. So it could be for for educating impoverished kids, or students who need scholarships, or whatever it is. It could be animal life. The sky's the limit. And what I love is that this is something that they're doing every single month. So I think their platform takes a whole philanthropic aspect to a whole new level. Both of these companies have this capacity, and people are incentivized because, like I said, you hold 1,000 units of these things, and you're going to actually stand to increase your allotment, because both of them pay out a 10% every month. So you're getting 6% on the Dash, and Decred, I think, is 10% goes to these different projects. And then the third one is called ETHLend, ETHLEND. And 2 weeks from now, 2 weeks ago, they launched a platform, and what you do is you pay with cryptos, any crypto you want. It could be, crap coins, whatever. And what happens is you are selling your crypto holdings to those who need to use those cryptos, and you get 10% interest. Now, my objection was, if this is a month, by the way, you get 10% a month. Now, any bank who charged their client 10% a month means that client must have the worst credit in the world. But that's not the case. This is the crowd. This is the knowing your audience is key. And the type of people who actually will borrow tend to be crypto traders. Once Bitcoin bottoms, or once they see they can make hundreds of percents off a coin, what do they care if they're paying 10% a month for borrowing your crypto? So, and I've checked out I've checked out ETHLend and Decred, and they're holding their own pretty well. So I think that these are ones that are going to potentially outpace Bitcoin when Bitcoin finds its low.
Yeah, ETHLend, I know a little bit about. Obviously, was one of the earlier players and one of the successful ICOs when it came to doing like crypto-based lending platforms. I've also followed a lot of other ones like Salt. I know, for example, we did an interview with Alex Majinsky on the DashCast, who's running Celsius Network, similar concept. And that's interesting about Decred as well. I have to look into that. But as you know and stuff, we talked about at Moontech, we talked about Dash and Venezuela, and I think it is very fascinating. They're continuing to expand. They have plans to get into Turkey, into Argentina, so many different emerging market economies that are going through currency crises. And I'm amazed to see the success that they've had in Venezuela. And it has to do specifically, Dash has great technology. It has private send and instant send, which are necessary features for a fast private currency for emerging markets. But not only are those values important to people who are using it in emerging markets, but the treasury has made it to where they can do this. I think so many projects are going to be set back because they don't have some kind of treasury model where some of the currency allocation early on goes to supporting marketing efforts, development of the network, all kinds of different things that a cryptocurrency needs, because you have to sell. People don't think about it. Cryptocurrency is going to be it's seen as almost as a service in a sense. We need to sell it to the world. We need to sell it to merchants and users. And if we don't have the means to do that, or something that's kind of, in a sense like a treasury, it's not owned by someone. It's owned by the community and those who have a financial stake in it. If we don't have something like that, then we're going to have to hope that people are going to donate or people are going to chip in a little bit, which really isn't a good sustainable model in my opinion.
Right, absolutely. There has to be an economic incentive for people to do what they do. And that's the beauty of blockchain, of course, is that it increases efficiencies across the board on so many platforms. So it's revolutionary because it takes the old paradigms and says, look, we're going to do this faster at a lower price and with privacy and security. And that's one of the projects I've been working on here is Hansa Coin, hansacoin.com, HANSE coin.com. I think it's like Smartlands. It's some of these platforms are what they're doing is they're creating asset-backed tokens, and the concept is any hard asset can be tokenized. So in other words, this allows fractional ownership in a piece of art, a piece of property. Two people are splitting up from a house, and the one wants to live there, and so half the house can be liquefied, shall we say. There's so many use cases for this technology, and what we do is we allow different platforms, whatever it is, to onboard onto our platform so that they can either capital raise for what they're doing or sell their product, sell their housing. There's a major capital mill here in Estonia. Actually, I'm in Finland right now. That's why it's very dark behind me. They're doing slush, and it looks like I'm in a warehouse, which I am. And it's been great. Slush is fantastic. I think this is the last day. But nevertheless, the whole concept. Excuse the random.
It's no problem.
Anyway, the whole concept is to take the ICO space, which is it's been a bit like the .com space. There were a lot of .coms with bad business models that they call them vaporware, and there's a lot of vaporous ICOs. There's over 6,000, I think, that have been listed, and only about 1,800 are still around. And out of those 1,800, many of them, again, they are on business models that are only in theory, and whether they can actually make them go it is a long shot in many cases, and it might be like the .coms, or I'm thinking it will be. There's only going to be a handful of companies left over at the end of the day. The Amazons, the eBays, these had first mover advantage, and they had the tech that worked, and that's what we're doing. We are a company that has the tech. We're building out the platform. We have a lot of projects that are being onboarded, and so it seems to me that first mover advantage in this space is going to be also very critical, because we've already attracted here at Slush. We met the guy who, actually at Moontech, we met the guy who won Elon Musk's competition for Hyperloop. Hyperloop is his vision, one of his many projects that, like the Boring project, for transportation purposes, takes transportation to a whole new level. And so the CEO of our Loop met with us, and we put our heads together, and we don't see why we can't do capital raise for his Hyperloop project, which he can then build out all the way to the finish line. So that's one of many examples of what we can do for people who are sitting with projects that are typically hard to raise capital for. I mean, you do have a lot of construction-ready real estate, for instance, in Finland here, where Slush is at. And we've met people who are building out certain cities in Finland that are very fast growing with big economic growth, and that's why they want to build out. So they have all these lots and permitted land. Everything is legal, everything's on the up and up, but they need the capital. And we looked at Axel and I put our heads together. We're like, this is a no-brainer. There's a reason we've met. So we're looking at this going, this is going to be such a massive growth expansion, because ultimately, what Tim O'Leary tried to do last March was he tried to tokenize hotel property. I think it's worth about $350 million.
Yeah.
He didn't get anywhere with it. Apparently, I guess regulations and all. And so that's the one thing that is a sticking point with us, is we make sure that we're regulated every step of the way. And we don't see how that should be a problem going forward at all. It's shocking to us that so many ICOs are not regulated. I guess that's been also the tone of the environment in 2017. There wasn't really the regulation to talk about across many platforms. So people had ideas, they realized they could raise millions of dollars, and they threw it out there into the market. And then they're sitting on, 30, 40, $50 million worth of capital they've raised. But that's part of that bubble. That's part of the 2017, which makes it like 1999 in that sense, but only in that sense, because I still believe that, the infrastructure of crypto, of blockchain.
It's in the early 90s.
Yes. 1994, like the internet space. Internets back then did not have the trust of the public. Credit card fraud was rampant. That retailers failed in 1994 simply because they didn't have the infrastructure or the audience. That's where we're at right now. So we're just getting started. Crypto blockchain is just getting started. This is another reason why Bitcoin is going to find a low, and when it does, it's eventually it's going to hit 20,000 again. And it's just a question of when. I mean, if it's anything like the last time it corrected, it could take 2 years from its major low to get back up to its old high of 20,000. And then, as technicals tend to do, once it reaches its new high, it should accelerate its advance. And every time Bitcoin has done that since 2011, it tends to gain at least tenfold. So that's why my projection of $1 million Bitcoin by 2023 is still on the table. I do believe that if we say get back to 20,000, maybe, 2.5 years from now, let's say 3 years from now. So that puts us in late 2021. Then it takes, say, another year for it to go up 10 to 20 fold. So that puts us end of 2022, and that is $200,000 to $400,000 a Bitcoin. So by 2023, it should hopefully get to $1 million, because that's not very far away from, with this stuff, it's orders of magnitude, not factors. So, orders of magnitude 10x, 20x, from 20,000, a nice tenfold gain is 200,000, a 100-fold gain is 2 million.
Yeah, I mean, considering those levels, I think that's when, as we were talking about, we're in the early a lot of people compare to the dot-com bubble, what we saw last year. And though there are very similar natures of speculation and, again, stepping into a market that's never been seen before, ICOs, not having really all of the, not only regulatory framework established, but also really ownership. What do you own in a sense? What are these tokens worth? It was very similar to the dot-com bubble, but we are in the early 90s, which is really fascinating. What's going to happen when we reach the real dot-com bubble, the real valuations of becoming a multi-trillion-dollar market? I think it's going to be really fascinating, and I hope that by that time, in order to avoid a major crash afterwards, that we're going to actually have STOs established, that we're going to start realizing that cryptocurrencies can become a currency market, that things will become much more, I guess, in a sense, legit, and we won't have maybe as sharp of a correction as we had in the past, but maybe similar percentage points as we've seen. But, I mean, going back real quick, Chris, I just want to say, with the work you're doing with Hansa Coin, you guys are pretty well positioned. I know you had mentioned Smart Lands and a few other STO projects out there that even some I'm aware of, for example. But the thing is, as much as they've got noble causes and great ideas, what's nice is that you guys have a regulatory framework established in Estonia. And I think that that's very big, because you've not only got the regulatory approval, but you've already got a set of projects in the pipeline that are going to be kind of like the testbed projects for actually building real asset-based tokens. And that's something that no one's really doing right now.
Not that I know of. I mean, I could certainly stand corrected, because, there's a lot of great minds in this space. And I would imagine there is going to be certain ICOs that are launched that are doing exactly what we're doing, because the space is so huge, there's room for many more to join in. And I always say share the wealth. So I think this is a great way to push things forward financially, structured finance. This is a groundbreaking evolution that a lot of smart minds are going to see the potential behind. So, we're not going to be the only ones, but I just love the idea. Amazon was first, eBay was first. When you're first, or within the first few, you have a lot of advantage. just because you are first. I mean, back in the day in 1995, I launched one of the first investment advisory websites, virtuousselfishinvesting.com, and I ran it for a year, and it was amazing because it's just for $20 a month overhead, I was making $1,000 a month, thousands of dollars a month at 90, because I was picking the right stocks, and even though the internet space was small, my picks were good. I closed it down at the end of 95 because part of working for William O'Neill, is you can't run a competing site. And obviously I wanted to work for the legend, the master, instead of running my site. But I've still run this. It had a reincarnation in 2010, and it's still going strong. So I have a crypto, it's called Dr. K's, I'm known as Dr. K in the States. And I have a crypto corner, Dr. K's crypto corner section on there, where I talk about a lot of what I'm talking about today in terms of my different charts, metrics. I go on record of saying, you should be shorting Bitcoin. Various coins are going to follow. And so when my algos, everyone always says, "Can you tell me when you're going to see this next big buy signal?" I said, I'm not going to tell you individually, but go to my website and I send, if you sign up, then you'll get the newsletter. When I see it, I'm going to send it out to everybody. And we have a huge following. So, the more the merrier. And it's kind of funny because, with Bitcoin, when it does hit a major low, there's going to be a massive volume spike if history is any guide. And I wonder if this volume spike is going to be bigger this time, because when you get loads of people all buying at the same time, it obviously adds to the volume. But Bitcoin is great because there's a lot of liquidity in the space. So yeah, I don't think it's going to have that much of a dramatic impact. But nevertheless, it's if people can benefit from my market calls, then that's what I'm here for. It's the reason I write these books. People are like, why are you writing books? I love to write. I love to teach, and I love it when I can teach an investor how to fish rather than giving them the fish. And then you've got a friend for life. You got an ally for life. And I think that's why we're all here, is to create these really, everlasting bonds with other people.
Yeah.
And that gets philosophical, but everything I think one does is from a philosophical basis.
It may seem
how one friends your life.
Yeah, it might seem a little bit like over the top and philosophical, but Chris, I agree with you. What I like about your trading strategy from watching your presentation when we were at the conference, and just generally, from the content you've shown me that you've produced over the past few years, I'd watched some of your videos on trading. What I like about your approach to crypto is you understand to not overcomplicate it. And I really try to tell people about this. I'm not an excessive trader myself. I've traded over the past few years, but I've kind of slowed down and focused more really on swing trading. And in swing trading, I really focus on playing the cycles, playing psychological cycles on things, and reading off of very, very simple indicators. I think a lot of people want to jump the gun and they want to become day traders, and they want to trade in very short time frames and hopefully, make 20% returns, double their money, et cetera, just continuing to compound and getting rich very quickly. But I think you can even do it in a very short frame of time, in a matter of 5 to 10 years. And in these years, play a lot of great swings and time them from a buy and a sell, waiting patiently for the opportunity to arise and compounding again. And I think that's one of the best strategies for someone who, A, doesn't feel like they can day trade, trading 24/7 and watching the markets constantly. And B, it's a way to really maximize returns for the least amount of effort rather than simply just long-term investing.
Absolutely. The thing about any kind of trading strategy is I always tell people, find what works for your trading personality. Some people are day traders. Some people are swing traders. Some people are position traders. Some people are value investor, Buffett style, buy and hold. Whatever works for you is what you should do. And it's like a fingerprint. Risk is also, the amount of risk someone wants to take on is like a fingerprint. Everyone's different. There's so many people, they want to know where I'm buying, where I'm selling. And I look at them, I said, that's going to mess you up, because my risk level is I'm guaranteed it's going to be different from yours. And if you're doing what I'm doing, when you stop watching what I'm doing, you're going to be left out in the cold, because you're out in the dark. You got to find what works for you, and you got to make sure that every rule you create is sound. In other words, your risk, your cost benefit basically, and your risk reward has to be in line with your trading personality, so you know how much to risk, how you want to sell, how you may even want a pyramid if you're a big risk taker, or if you, again, believe in a cryptocurrency or a stock that you think is really going to shoot the moon. If I use myself as an example, there's a rule I have with stocks, because I know stocks can gap down overnight huge. So I never bought more than 25% of a position, and consequently, my upside is quite huge, but my downside is also minimized because leading up to the crash, to the bubble bursting in March of 2000, there was a lot of volatility in the space, and I would find myself getting in pretty big, full margin, 200% long, and then going all the way down to 20%. And this was scattered across many stocks, and because 25%, so typically 8 stocks or even more, because sometimes I cut back positions, so a 25% position becomes 12.5%. And so I'm sitting with a basket of stocks, but I find that fluidity allows me to, in terms of my equity curve, it smooths it out, so you don't have these big corrections or these big advances. But there was one time, it was in the first quarter of 2000, where Celera Genomics was going crazy, all the biotechs were going crazy.
Oh yeah.
And I went full on into CRA, Celera Genomics. And there was one other, I think it was Millennium Pharmaceuticals, and these things they just went through the roof. And because I did that, I was up triple digits in 2000. After March of 2000, I didn't do much. I pretty much sat in cash, but I made most everything during that first quarter because of my big bets. Because I just looked at this going, these are not going to crash out overnight. And I'm going to take, I took 50% positions in these things, in 2 of them. So that, is breaking my rules, but part of good investing is knowing when to break your rules. Yeah. It has to be on a sound base. I never want to have a situation where everyone should know this, that their trading strategy should be not just 6 sigma strong, but like out to 9 sigma, 10. In other words, you should be able to trade your strategy for, 20 lifetimes and never blow up. Then it's sound. Then it's a sound strategy. And most people forget about that. Even some of the best guys out there will have a great trading strategy that can work for years. What was it? Victor Niederhofer, great example. He used to do these little micro trades, and over every year he would be trouncing the markets, and his fund got up to about 120, 130 million. And then the S&P futures lock limit down one day, and he was on the wrong side of the trade. And actually, he just ruptured his whole account. I mean, it went to zero, and that was it. And I read his book, Education of a Speculator, and it was a good lesson in how he sees markets. But more importantly, his blowing up was the best lesson I could have learned, because it just showed me that it doesn't matter who you are, including myself. It doesn't matter. I can't sit here and say, oh yeah, my strategy is foolproof. There's no such thing as foolproof strategies. It's just they don't exist. If you're going to put 100% of your money on the line, be prepared that maybe that black swan event hits and you couldn't see it coming, but just always know that it is a possibility. And it's just good. It keeps your feet on the ground, because I see also Victor Niederhofer. He's a great example of someone who it just went to his head. The success went to his head. I've seen this through the dot-com bubble in 2000 or 2017 with all the ICOs. This success goes to people's head. It's like, and again, it's like a finger. It's a pattern that repeats over and over again. And so being able to identify it means that hopefully you can identify it within yourself if you get caught up in the success.
Yeah, I can tell you when I would actually use myself as an indicator for my trading success. So when I would get feelings of euphoria sometimes, as anyone would if they're on the winning side of a trade, I start to notice when things start getting a little bit overbearing. I'm like, okay, you know what? I'm getting too caught up in this. Time to follow the strategy, take profits when necessary, realize that euphoria doesn't last forever in some cases. But yeah, no, I'm the same way. I would always basically have some form of format. And I told people I used to do a trading journal, which I recommend. I bet Chris, you'd probably agree as well, that anyone getting into trading should do that. Consistently critique yourself, always learn from yourself. But in that case, building a strategy that you feel comfortable in and continuously critiquing it, making it better. If things stop working, don't keep going down that same path and try to figure out what you're doing wrong. But yeah, there is really no one way to trade. There's always new ways coming up, and it's fascinating to see how people attack markets and try to beat, against the S&P and all the major indices.
Yeah, there's so many ways to skin that cat, and that's why it's just wide open for anyone who wants to take a stab. It's just not just also know their emotions, because everyone's going to have emotional weaknesses that they should learn maybe how to overcome or work around them. And one great technique that shockingly a lot of people don't do, but I think it's one of the best techniques is to keep a trading diary. So every trade you make, put down why you did it, what's going on, what you're feeling, what's your emotions that are running through, and then as the trade succeeds or fails, continue to keep that diary, because then you can go over your trades every quarter. Everyone should go over their trades every quarter and read through their journal and figure out, okay, what could they learn, what could they do better next time, because this is all about self-improvement, just like going to the gym, nutrition, health, all of that. Life is an endless journey of growth and evolution, and so this helps one evolve their trading abilities, I think, better than most techniques out there. It just takes keeping regular tabs. I'm just shocked when I ask a lot of traders, where's your trading journal? Do you keep one? And I gotta tell you, like almost no one does this. But it's such a simple technique. And you will go back, if you have, imagine having 3 years or 5 years worth of trading journals, and you can go back to those points in time, because there are going to be new markets, and markets always change. That's the thing about the stock market. It never stays the same. I mean, you get the cycles where you get, the big, flood of capital, and it's very easy, but then that's going to change. I mean, look at 100 years of markets. They're never static, because people are not static, and human nature doesn't change, which is why the patterns repeat, but the cycles are different. Every cycle is going to be different. And so just because a technique works for one cycle doesn't mean it's going to continue to work. That's why there's no such thing as get rich quick or black box. You have to always stay ahead of the curve. With O'Neill, being a disciple back then, of course, my investment partner and I, we've had to come up, for sake of survival, a whole new slew of buying and selling strategies in the last several years, because this quantitative easing environment has distorted so many metrics. So many tried and true methods that used to work for evaluating stocks and market direction do not work anymore. And this started in 2009. I identified it really fast. That's why my market direction model adjusted very quickly. That's why it continued to outperform. But I know so many people, and day traders alike, there's so many styles, they just went out of vogue because the QE distortions, which are still there, but in different ways. Again, QE itself is an animal. It changes, the flow changes, and so its impact on the markets also change. There's no static. I like the idea of, this is a different topic, but the idea of that AI, something that just fields all the data in real time and then adjusts accordingly. And then there are some trading bots that have been programmed that can do this. Again, it's going to be competitive like anything else, and I think some of the AI will fail, and the best ones will continue to survive. And as far as if there's such a thing that, an AI that can, continue to learn to stay ahead of the curve, yeah. But I would think that if it's doable, then everyone would do it, and then the market would change accordingly. So those AI no longer work anymore because they aren't out thinking the way they should. If you get me, it's always to some extent a zero-sum game. Everyone's competing in the same arena for I wouldn't say a fixed pool of capital. It is a growing pool, which helps, but nevertheless, it's still more or less a fixed pool. So you have all these different competing strategies, and only the best ones are going to win, and they're only going to win for a certain amount of time. And so the creators, the originators, have to realize that, like for instance, Gil and I, we wrote the book How We Made 18,000% of the Stock Market for John Wiley and Sons in 2010. It became a bestseller, and we've had loads of success that led one to ask us to write this book. Now, it's so easy to say, okay, well, we figured it all out. No, we're like O'Neill. O'Neill told us he is a student of the markets. The markets will always do something that is new to him that he has to adjust to. So unless, and this is why, by the way, this is a little sidebar for people who have studied the CanSlim system and O'Neill himself as a legendary trader. I knew his son very well because he had me teach his son how I trade. I was O'Neill's right-hand man at his company for several years, head of technical and fundamental research and helping to manage his own personal wealth. And his son used to relay these stories to me. He said that his dad never took a vacation, or the last time he took a vacation was like 20 some years ago. And when he did go on a vacation, he took his big chart books with him, like these big institutional product chart books. So he had his nose in the charts the whole time they were up in this like log cabin trying to like get some peace and relaxation. I thought, gee, I wonder, it's kind of like, I don't think I've had a day where I don't look at stocks. Of course, since 2013, it's been crypto. obsessed with the whole space, how it's evolving out so quickly. It's an exponentially growing technology. But yeah, stocks since probably since 1990. God, it's been ages. I love this stuff. And like I said, at 11, I was tracking the spot metal prices. I just always like to see if I could figure out something that'll help me understand technology better, that in turn has a monetary payoff as a result. And in running Hansa Coin, it's not just it has nothing to do with trading. In this case, it's just pushing blockchain forward. I love all the people that we've met along the way. They're all had their own special projects, and I think it's great. I mean, someone could say, well, Spartanlands is competition. Well, not really. I mean, they're doing. There's overlap, sure, and I encourage everyone to look at what I find interesting about their coin is that they're the only coin that they've gone up like 5-fold in the last several weeks, and everything else has collapsed 50%. And it's because the story behind the company is all about platform build out, onboarding hard assets, whether they're real estate or art, collectibles, manufacturing projects, agricultural projects, exactly what we're doing. And I love that their coin is totally accepted by the marketplace. We don't have a tradable coin yet. Our coin is connected, the value is connected to the underlying asset. We have a first use case, and it's quite a strong, brilliant first use case. So it's kind of a no-brainer. And when people understand what we do, they want to participate. They want to be involved with what we're doing. But we are going to be launching a Hansa coin, which call it a master coin that is tradable, that will float. And we're going to be doing this within the next few months. I always encourage everyone to join our Telegram. It's a Hansa Coin Telegram. But go to our website, hansecoin.com, and they can join our Telegram. And Axel, we've got the public sale, which just launched. We decided to do it during the Slush annual event. Oh, okay. So we've launched the public sale, so people can join our Telegram and find out more and how to participate if they wish. But back to Smartlands, I love that this is a coin. It's the only coin, I believe, I could be mistaken, that has gone up this much, or actually that has even gone up at all in the last 8 weeks. And if you look at Smartlands compared to Bitcoin, it's completely trounced Bitcoin. Bitcoin's a hard one to beat over any given cycle. But again, Smartlands is like equivalent of a hot IPO. And back in the day, Goldman Sachs and Morgan Stanley, all these investment banks, they give their best IPOs to their best clients. Now, they know when, for instance, when Amazon, eBay, whatever it is, the first day it trades, it's going to trade at a huge premium to their listed price. So their listed price is $18. Then it's probably going to start up around, $25 to $30. So their best clients get the IPO. And I think that some of these stories in the crypto space are the equivalent, especially the first user, the first mover advantage, basically. And Smartlands has that. We have that. There's other concepts that are coming online. I encourage all your listeners to do their due diligence and research these companies through and through. I find that going on to Reddit is a great way for criticisms to be dissected. So when I'm looking at a company, when I'm sizing up a company, and like I mentioned just now, I'm going to look at all the Reddit commentary. I'm going to look at any articles on the company. I'm going to go to Steemit. Steemit there's a lot of high quality analysis on there. When I say this, you have to vet, because 9 out of 10 things are going to just be plain wrong or just distortions, just like in stocks. So you have to kind of get used to what is real and what isn't. And that just means a lot of detective work, which the pieces will come together, the dots will start to connect. The more you do this, and then of course the final judge for me is the stock. Well, in the case of stock chart, but the charts tell it all. They tell you the supply demand for the buying and selling pressure for each of these individual coins. And I'm a chartist. I'm what they call a techno fundamentalist. So I use fundamental backdrop first, and then I look at the technicals to time my entries and exits. And I find that's worked for me really well over the years. With the luxury of blockchain, of cryptocurrencies, is that you have one coin, which is the master coin, this Bitcoin, where everything correlates to it. So as long as Bitcoin's going up, you've got the wind in your sails. And so you can then go and fish around for coins you think are going to outpace Bitcoin. I've got my handy list of coins. I've added these 3 I mentioned to your listeners. in this podcast, to my growing list, because when Bitcoin does turn around, I want to see how those coins behave. Do they continue to outpace Bitcoin? And do they form a constructive pattern? So if I do get into a position, I have a low risk exit point if I am wrong. Because I'm, of course, always my hit rate, by the way, when people hear me talk, they're like, they think I can do no wrong, which is just let me try to be really humble. I think my hit rate at best is 50%. I mean, I'm wrong just as much as I'm right, but the key is you've got to make sure your risk is under control. So my risk is, what I risk is going to be always a lot less than the
what you can make.
Upside.
Mm-hmm.
Yeah, and everyone, I think there's a loose rule for stocks that says 3-to-1. In other words, if you're going to take the position, know that your potential reward is at least 3 times what your potential risk is, so that you could be wrong 3 times and still break even. And that's a very rough rule of thumb, but there's truth to it. And again, everyone has to find what their own risk tolerance levels are, and they create their own rules, their own selling strategies. And here's another exercise I find that's useful, especially in software. You can step a chart forward by a day. So you could actually pretend you're in real time and see how you would buy and sell the cryptocurrency or the stock as you move the chart forward day by day. So you're not, you can't cheat by looking into the future. Mm-hmm. And then you can test your strategies to see, what works best.
I used to always actually do that in TradingView when I trade stocks. I was fascinated. I found that on my own, actually, where you could honestly, I was like, well, wait a minute, if you can look at a different time segment, you could always, and this is with most charting applications, but you could always say, wait a minute, like now I can actually kind of test to see. Now, if I don't look at it, if I don't look at the chart in the future, I can actually go ahead and try to guesstimate what I would do here. And yeah, it's like paper trading in a sense, but you don't have to wait for the price action to go through, and you might be able to start engaging in real trades eventually once you see your strategy works. But it is fascinating stuff. I think more than anything, people need to come prepared, as you're mentioning. You've already got coins that you're watching right now. And again, speaking to the debate that a lot of people have over altcoins, I've spoken on panels where people are all in favor of altcoins and diversifying into crypto, and some absolutely hate it and they're Bitcoin maximalist or ETH maximalist. No matter what, as a trader or investor, there are going to be plentiful amounts of opportunity. If people thought last year was crazy, think again, watch until 2019, 2020, when things start to turn around, hopefully. If you start to see that again, we get another one of those macro cycles or super cycles in crypto, there is going to be massive opportunities to either A, find some really great cryptos that might continue to run up long-term and compete with Bitcoin, or some that simply just provide an opportunity to increase your Bitcoin position. And I think that's so smart you're doing that, Chris. And then also as well, setting up in a position where you can lose on half of your trades, but you've got your stop set, your risk is mitigated, whereas your profit margin potential could be much higher. And that's the way I've traded for years. It's something that's helped me very much. And just raising your stop if you want to let it continue running afterwards.
Trading journal is very key here, because you can then record, you could see, there's something strange. Why am I losing money now? And you can also see maybe you people are not static, and so one's ability as a trader can also change if they have a string of losses. They can actually get gun shy. So if the market recovers, they still keep losing. It's tricky. There's no get rich quick thing. One must always be attentive to their emotional makeup, because there's people who, like, for instance, I knew one trader who he was a bit top heavy in one stock. It was a biotech, which was dumb. This was not the year 2000 when biotechs were screaming. This was many years later, and it lost like 80%, and it devastated him. And so his trades after that point had changed. His trading attitude, everything had changed. And a trading journal would have helped him recover faster, because he would have immediately seen that his trading is not the same. You could look at his last 10 trades and compare them to when he was successful and see, okay, I'm not doing the same thing anymore, so I need to get back on track. And that's the other thing. If someone is off track, and there's lots of things that can make someone off track. For instance, death in the family, all kinds of things that are part of life. Certain people might not take to very well, and that can knock someone off their trading post. So also, that's part of knowing, know thyself. If something bad has happened, and it's affecting you as a trader in terms of your ability to see opportunities and make sure that you adhere to your rules, then maybe don't trade. Maybe take time out. Don't trade for a month until you've completely recovered over whatever the news event was.
It's like playing a sport. Like, if you've had something traumatic or if you injured yourself, it's best to take a break and again, assess the situation, realize, maybe I'm not in the best state of mind to do this. Just like it would be if you're stepping behind a car and you've had a bit to drink, make sure you're in the right position to do it properly and to get the best results. I mean, again, I think a lot of people are eager, as you're mentioning with the trading journal concept. Too many people don't want to do a trading journal because it requires that you take it slow. Many people don't want to try paper trading or trading with a small amount of money rather than going all in and hoping to get those returns because the opportunity is right there. The beautiful thing about markets is that there will always be opportunities. There will always be time to get in later on. Even during some of these crazy cycles like the dot-com bubble and crypto as well. I mean, there's plentiful amounts of time and opportunity to get in and stuff. It's proper to do it right. And I want to ask you real quick, Chris, because I know this is something that's, I guess out of the domain you're focusing on right now. A big question I want to ask has to do with equities. So on my channel and stuff, we've started to cover over the past year a little bit outside of crypto. We've started to talk about, U.S. stocks predominantly, but we also talk about commodities as well. What do you think, with the quantitative easing turning into quantitative tightening? You've got interest rates rising up at a rapid pace, and the Fed's set to raise anywhere from 2 to 3 times this year. At least that's what they're stating now. What do you think the current state of equities is going into 2019?
I love this question because it's in my mind, actually. I want to steer it exactly that direction. I just heard an interview by the great Jim Rogers. I have nothing but utmost respect for him, but as he has fondly said of himself, he's a terrible trader. He's been one of these guys that have said, these people I actually were 100% in agreement with up until recently. The 39th day. It's a brilliant take on cycles through a few thousand years that when government, call it over-regulation and bureaucracy and corruption and all that nice, wonderful stuff, and people they revolt. Revolution can happen. The populist movements start to rise up. We saw this in the 30s. The 30s were very obviously through the Great Depression. Lots of upset people who couldn't get their jobs. Homeless people. It was a terrible time to be around. And by contrast, I would say that. There's a lot of people out there in countries that are first world nations like the UK, the US, the EU. People are struggling. I've read different studies on this, and there's a lot of people out there, say in the US, that are food challenged. I mean, I think it was 1 out of 6 families are food challenged. A lot of kids aren't getting food on the table, and this is a shock that this is happening in the world's great nation, the economic powerhouse of the world. I think that. Let me discuss QE first. Of course, the U.S. is the first to QT, quantitatively tighten, reduce the balance sheet. They need to because there's not enough interest rate fuel in the tank. In other words, they've done 8 rate hikes of 25 basis points each, so they're 2% together, but they're still not at historical norms. And the rest of the world, of course, interest rates still remain at near all-time lows over 5,000 years. I have a interest rate chart of 5,000 years, and before the QT program, the whole world was at an all-time low as far as the interest rates. So the U.S. is the first to do this. It needs to be done. There has been growth here. Trump's policies, like them or not, are helping manufacturing. I think that it's the strongest in 32 years. Small businesses, which are the lifeblood of any new economy, have also their strongest level of confidence in many years. Certainly under Obama, it was like night and day. They lacked confidence because they felt Obama was not small business friendly, but Trump is. That is helping a lot of things accelerate in the right direction for the U.S. But a lot of the rest of the world is still stagnating. I mean, you look at their markets, and that says it all. I mean, the U.S. market is more or less has been going to new highs. I mean, of course, we've gone through a correction recently, but when you look at any one year cycle, where the bull market is still alive in the U.S. The rest of the world, however, has been in a bear market all year, and they cannot reduce their levels of QE as they would like. So QE still flows hugely. That's why the U.S. markets are beneficiary of that, because they're the tallest standing midget. And that is not an ideal, healthy environment whatsoever. You also have a complete growing disparity between the top 1% and the bottom 90%. Where it used to be the top 1% wealth was equal to about 30% of the bottom 30%. But now I think it's at a very high. It's at an all-time record according to Ray Dalio of Bridgewater. I think it's like a 1%. Top 1% is equal to the bottom 90%.
Yeah.
However, and here's the thing: all these guys like this includes Martin Armstrong and even Alan Greenspan, the former Fed chair. These guys, super successful, super smart, but that doesn't mean they're going to continue to get it right. And Buffett's a good example of that. He missed the whole dot-com boom. He doesn't understand crypto. A lot of these guys have had huge success, but they think, this includes Jim Rogers. Jim Rogers said 4 days ago on an interview that crypto's going to go to zero. Blockchain's worthless. He sounds like Jamie Dimon. He sounds like Nouriel Rubini, my good old friend from New York City. They profoundly believe this is the case. And again, okay, well, I'm not here to proselytize and convince. I'm just here to. I've observed this over the. If you look back even at like the 1900s World Fair, it was a technological fair. All these new technologies that are coming online, and if you look, the old I don't like to get ageist, but let's just say people who've been around the block said this stuff is impossible, or it's not going to happen, or it's bad for society. These are great groundbreaking technologies of the time, of 1900, the year 1900. So I think that over the years, it's a way that new minds, creative minds, create the technologies, and the people who've been around with all the success might be the most skeptical. It's just because they've been around with all their success. In other words, experience can work against you. And in fact, that comes back to trading. It's just because you've been around, successful trader, and I remind myself of this all the time. Just because I started young and I've been doing this for a long time doesn't mean I'm going to be successful tomorrow. I mean, I think Bill Gates also said this when he was like, I think he was like 40 years old, and he said, at some point in my life, I know I'm going to have to find substitutes for me because my mind is not going to work as it does now. It's going to slow down. And I don't like to think that of myself. I still feel, I've never slowed down since I was 15. And thank you for whatever's up there. I don't get sick, all this great stuff. But I suppose at some point age catches up. And this comes back to actually something that Raymond Kurzweil says, and I love his predictions because I think something like 9 out of 10 have come true. He talks about age regression machines and all kinds of stem cell techniques. So I'm still betting that he's going to be right. That I think he said in the next 25 years, if he can stay alive that long, they will have reached humanity will have reached the what he calls age escape velocity. So in other words, for every year after 25 years, you will be able to live 1.2 years for every year. So you'll actually be age regressing after 25 years from now because medical technology will have advanced to that level. So that's another way of saying we will have, as a species, become immortal. And of course, what does that have to say for the spiritual implications of why we're here? That's a whole different podcast.
we're gonna have to have you on a second or third time, Chris, in the future.
Would love to. I love chatting to you. It's just like in Estonia, it was great. I was like, oh, kindred spirit here.
Yeah, no, I mean, seriously, I mean, to those of you guys who are listening and stuff, Chris and I had a really good set of conversations when we were in Estonia. Not only spent some time showing us around and stuff, but it was a beautiful area, had some great conversations. But I mean, to a few of the things you talked about, Chris, I don't mean to leapfrog too much back. I like the point you brought up because you were mentioning the difference between the U.S. market right now and global markets when it comes to not only economic growth and GDP, but specifically in assets. And with quantitative easing, this is something that I never had known about, and that is the fact that you still have all these European and Asian markets that still have quantitative easing being thrown at the economy. Interest rates have still remained at either zero or the levels that they've been since 2009 or 2010. But the interesting thing is that quantitative easing, even though it's supposed to stimulate the underlying economy, a lot of that gets flowed into other global markets, and predominantly in the United States. And you get this dichotomy where the US has the ability to raise its interest rates, even though it's gotten rid of quantitative easing and is actually going to quantitative tightening. And equities are still able to hold quite nicely because you have those global inflows. It is the premier area to have capital now. And we've seen that with the repatriations. We've been seeing that, obviously, even as interest rates are rising, as global liquidity is tightening, money's still flowing into the United States. So I think it sets a bigger pressure on emerging markets, even in developed markets like European markets and Asian markets. So it's a very interesting situation. So I appreciate you sharing that. I just wanted to make sure people got that. And as you mentioned, you've met Nouriel Roubini personally. You've met a lot of these high up figures who are economists. I think people get trapped in a way of thinking, and sometimes that's good. As you mentioned, Buffett, for example, didn't invest in Amazon when to many people it was right in front of their faces. But again, he's someone who invests the way he does. He's made a success, but at the same time, it regulates you from seeing other opportunities. So I think it's a really big issue. I think still that lasts within the human mind, and it's breaking that human nature of cognitive dissonance and thinking one way, finding methods to be open-minded, but not also spilling out your brain and being too open-minded to just about anything.
Right, exactly. They tend to agree with Ray Dalio that Ray has gone on record saying that he expects fiat to have a huge devaluation in the next 2 years. Now, my members and my audience, that okay, you know what? The U.S. did devalue the dollar by 41% overnight in 1934, and that was a whole different time. Ray Dalio has, I think the guy's great. I think, he's running the world's largest hedge fund, but that doesn't mean he's right on this point. I was in agreement with him and Sekoda and all these guys who I have nothing but the highest respect for. But now I've kind of, as of a few months ago, I connected some dots that I hadn't connected before. And actually, first of all, the comparison Ray makes in between the 30s and where we are with this QE environment since 2008. And they're really different environments. I mean, the 30s was steeped in progressive leftist business hamstring policies, which choked the lifeblood out of any new businesses. And therefore, yes, under FDR's regime and the New Deal, it was disastrous for innovation, for businesses to survive in that environment. Whereas today, I think, the Trump policies, like him or not, are very pro-business. When you reduce taxes, corporate taxes from 35 to 21%, that's going to spur some growth. And the fact that small businesses love him and they probably don't love him, but let's just say they really love his policies. So that's great. Today is a different time. And the Gavopoli book at Sekoda's, I love the message behind it. I think there's lots of truth to a lot of the social unrest we're seeing, and there's a lot of struggle, a lot of strife out there. In some ways, more now than say 10 years ago. But if you look at it from a long-term perspective, we are so much better off overall now than we were, say, 50 years ago or 100 years ago. Every 50-year segment, we're just so much better off. And I'm not talking about third world. Third world is a different story altogether.
Yeah.
I'm just talking about, in terms of what the U.S. is. Yes, there's people who are food challenged. Yes, that's horrible. But at the same time, there is the rising tide has lifted all boats. I think that the top 1% boats are like these screaming yachts that are on much higher levels. But even the bottom, 20%, those boats have been lifted too, just not as much. And I know that, there's a lot of people who say that's not fair, whatever. It is what it is. It's how society operates. It doesn't make it right. It doesn't make it ideal. I think where blockchain makes a big impact is it empowers the individual, and so it can have the potential of really lifting the tide to a far greater extent than what we've seen, and at the same time maybe creating some reduction in the difference between the 1% and the bottom 90%. Maybe there's more capital flow through different socioeconomic classes as a result. Plus, there's just so much to talk about. There's the education, onboarding of AI, artificial intelligence in education, tracking pupil dilation, so you can see how a child learns. Every child learns differently, or let's just say there's like maybe 12 different styles of learning, and certain children are going to learn, one style over another. And so these AI bots can track a pupil dilation to track the student's level of interest in real time. And so, students potentially over the next 20 years are going to get educations that we could have only dreamed of.
Yeah, I mean, there's going to be lots of a lot of great excitement, or a lot of great exciting things coming over the next few years. As you were talking about improvements in education, as you mentioned, blockchain. Just as I think one of the first speeches at MoonTech was an Australian economist talking about just the idea that we could remove the need of a third party in, for example, auditing or signing contracts, just any kind of process auditing. Did something happen? That takes a whole bunch of inefficiencies and boosts profit margins for a lot of companies and allows, much more value to be created elsewhere. But, to your point as well about wealth inequality, I always try to attack this topic in a very kind of middle ground way, as I used to do, because usually people they focus on the wrong thing. They want to focus on the right thing, but it ends up that they're in this false dichotomy of, for example, if there's a wealth divergence, they say, well, how do we fix it? Do we raise taxes, or no, do we lower taxes? Do we take kind of like a Reagan-esque approach and try to see the trickle-down effect, or no, do we just tax the rich? The thing I always go to is, it's like when you're doing that, you're not addressing the real problem. You should be asking, why is there a wealth divergence? Well, there's really two things. Partial amounts have been automation. Automation has played a big role in cutting off a lot of necessary blue-collar jobs that were existent just about a decade or two ago. And that's kind of something inevitable with the growth of technology, and we can talk about things like UBI and stuff afterwards. But really, over the past few years, a lot of people don't know why. It's like, I think 98 or 99% of the new wealth created since the recession has gone to, I think, the top 1%. The reason for that is because we've created an asset bubble with monetary policy. When you make it an environment where the only, for example, you have an equity market that's already down 50%, but when you have guaranteed capital entering into markets and an interest rate that's practically zero, at that moment, capital is practically free to borrow. You can generate free capital, and you just got to originally pay back your original investment. But if you can go buy these equities that are at a discount, you've got a guaranteed amount of money. And that's what they started doing, actually. They started buying treasury notes because there was the 2% yield, and the Fed had to correspond or react to that. And then after that, it was just an equity bubble that started building up. And who owns equities? It's the top 1% that owns, I think, 50 to 60% of equities. The bottom 50% of the United States, the richest nation on the earth, owns about 0.5% of all assets. And that gives you your picture right there. That's all you need to know. That's the multi-trillion-dollar divergence between two separate real classes of people.
Right. I mean, there is, the pension funds, which are, of course, massive, and there's a lot of people who have pension funds. I would say that, if you're looking at really like the bottom 10%, or, they probably don't have much exposure at all. I think that stocks are more prevalent now than, say, they were, decades ago. Decades ago, it seemed like that was really the playground of the rich.
Yeah.
And in the pension fund industry, that certainly helped equalize that playing field, so that a lot of people could enjoy investments in stocks, mutual funds, whatnot. Fidelity, Magellan. These are huge behemoths, and then you get loads and loads of different people, often by way of pension funds, that are involved in at least the stock moves. So you have bubbles that exist in today as a result of the QE environment. However, I'm not seeing any pernicious bubble like endemic that could black swan everything. It's not 2008. 2008, you had all these ninja loans to people with no credit, and they kept creating these subsets of defective financial structures. And the more subsets they created, the worse things got, and more people could get these loans for a dime on the dollar. And of course, that was a bubble that blew apart, and we saw what happened in 2008. Right now, where we sit, I see different bubbles, but they're more small. There's smaller bubbles that are, they're concerned. The stock buybacks, for instance, with all this QE flooding around. That's at I think all-time highs. And the S&P PE expansion, all these things. A lot of the tech companies are sitting there with really inflated PEs. But then the question put to me was, well, technology. We have a lot of exponential technologies out there, AI, VR, virtual reality, augmented reality, blockchain, of course. And these are things that markets tend to, they look at, going forward 9 to 12 months or even further, 18 months down the line. And the question is, well, with Trump's policies in place in terms of the U.S. market, is that enough to keep the GDP level at a strong level? I put that in quotes because I have problems with the way they calculate GDP and CPI and all that. But is that enough to keep the money flowing in the system so that, yes, if you have a bubble breakdown, but it's a smaller bubble, so what happens then is you get a serious correction of, well, let's say we get a bear market. We get a 25-30% correction in the NASDAQ or the S&P. I mean, we are due to have one, but that doesn't mean we can have a complete breakdown of the system. 2008 was such an unprecedented situation where, the percentages lost would have been far worse if the Fed didn't step in and start printing money en masse. And that QE movement started, I think it was November of 2008. Everyone thinks it's 2009. They were churning the presses back in late 2008 to stave off the bleeding. And so we had this artificial market that's QE induced. It's QE bubble. And I used to say, this bubble's going to blow apart and it's going to be really ugly. Jim Rogers said the next bear market's going to be probably the worst in his lifetime, etc. Dalio with the devaluation of the dollar, all this stuff. I'm actually not seeing it anymore. I'm not seeing this massive Armageddon, the day of reckoning. I used to say, people who followed me over the years, they'll see that I've written about all these things happening because I was in the Dalio camp, the Sakota camp, all of that. I think that the counterbalance really is blockchain, is AI, is VR. Yes, AI is taking over a lot of jobs. A lot of people will need to retrain. That is the nature of technology. AI is far more dramatic than, say, other technologies that have come before it. But nevertheless, the fact is the same when you introduce a new technology like, the humanity has done this, especially in the last 100 years. You're going to get people who are made redundant and they need to retrain to whatever the new position is. And the thing about technology is that what interestingly happens is it doesn't wipe out. The net effect is not to wipe out jobs. The net effect is to actually create new jobs and create more new jobs than the number of old jobs that were lost. And I actually don't see that AI is going to be any different. I'm sure there's going to be people who disagree with that vehemently. And again, I haven't researched this completely to the core, so I could stand corrected. AI may be that one technology that is just it wipes out so many jobs that, and we've never seen anything like it. But at the same time, I've written an article about really advanced AI is going to create so much wealth. In other words, a good case in point is at the turn of the 20th century, turn of the 19th century, you can go back and you can see that people had to work really long hours because there weren't the conveniences we have today. As AI really comes online, we're going to have so many more conveniences at our fingertips. There's going to be, the average standard of living is going to be that much greater. And then there's this concept of giving people, people get a certain stipend from the government just for being a citizen. And I know some people, there's a lot of people who disagree with that, but if you give that to like a welfare state group of people, they're probably gonna, I don't want to talk badly about welfare state or get political because there's a lot of fine people that are struggling that are on welfare. Let me put it this way: there is the universal basic income philosophy. It seems to work in certain parts of the world where people have drive, they have a good educational system, and they want to do something, and the universal basic income allows them to do that, focus on what they love to do. And I think with all this wealth creation via artificial intelligence that's coming online, and I don't mean in the next 10 years, I think there could be every transition is difficult, but say, let's look 20, 30, 40 years forward. I think we're going to have a society where we look back on where we are today, and we're going to have a lot more free time to pursue the things we want. So it allows people to really pursue what they're good at doing. And same with schooling, same with education and all of this. People can really realize their talents. And I think 100 years ago that was not a luxury that humanity had at its disposal. But I think we're going to move into an era of people honing and refining exactly what they want to do. So, I mean, I've been very lucky in my life that I did a pivot away from nuclear physics. I liked it, but I didn't love it, and I'm so glad I made that big move. And from there, the whole world opens up when you're doing what you love to do. Because then from stocks, I went also. I love music, and I had a couple songs of mine chart on iTunes. I love composing, and that's never left me. And I'm just doing the things I love. And I think the future world will allow. And the reason, by the way, I've been able to do that is because I did very well as a speculator. So I had the money to be able to tell O'Neill, okay, I'm gonna be done now. It's been amazing working for you, but it's 2001, and I want to release an album. I want to compose and really focus on this. And that's a luxury to be able to quit your job and just go off do something else. Because music is not something that I've ever even looked to make money on. I've had people try to monetize me, but I prefer to do it pro bono. So all my stuff, when it gets used in a documentary or whatever, I just get credit. That's it. I would like to, maybe explore it further, but it's nice that someone can have these options at their disposal, so that they don't have to be, a slave to a 9-to-5 job. A lot of people have the mentality that, they're working for the weekend. They don't like what they're doing, and that's a sad state of it's not sad. It's just necessary for most people who are in that position. They're married, they have 2 kids, they have all these fiscal responsibilities. They don't have a choice. And I'd love to see a world where people have a lot more income that's flowing in at their disposal, so they could have a family, and yet they're pursuing art or music or acting or whatever it is. And it's not a utopian vision. I think 100 years ago it could have been labeled as such, but I think that there's a lot of technology coming online that will help us realize more freedom in this regard. But I just to clarify, I'm not a utopian. What do they call utopianist? These are people who think everything's going to be just perfect and everyone's equal and blah blah blah. It's not real. It's not who we are. We're here to evolve ourselves, and that takes a lot of hard work. And as a result of all this hard work, we have a lot of great, exciting, exponential technologies that are coming online that I think will really free up. When I say free humanity, I mean it'll give the average person, a lot more free time to do what they want to do. Mm-hmm. And with good education, there's going to be a lot more motivation to actually not sit in front of the TV and gel, but actually do something and create something, write a book, paint whatever it is, program code, whatever you love to do.
Yeah.
And, I would like to say, if I could stay alive long enough for that to be realized, that would be great. I think that Kurzweil could be onto something when he says in 25 years we will reach the escape longevity escape velocity. Great, then I will be around. Fantastic, and I hope he will too. I think he's 65 now or something. So that would make him. But he's a healthy guy, so.
Well, I mean, Chris, you made a lot of great points there, and practically all of them, I completely agree with you. I think that a lot of people, as we talk about kind of job scarcity, a lot of people mention back to the days of the 50s and the 60s where you had a standard job. You could do the job your dad did. It was set in stone. You had your 20 years you worked. You go into retirement. You raise a family. And I think in a sense, that was a blessing, but it also could be a curse as well. And that's something that we're not seeing in today's world. We're seeing the opportunity where it's like, look, there are some opportunities where you can stay 5 or 10 years in a job and maybe do a similar job afterwards thereafter. But the fact of the matter is that we're changing to a very interesting time for those who are more of the kind of free-flowing creative types who love to bounce between different things. In 3 or 4 years, you might get tired of what you're doing, and you won't be stuck if you're willing to work towards it. And I think there's a beautiful, opportunity there for a good chunk of the population. I don't think everyone's like that, but I think many people kind of maybe hear and stuff and might be involved in crypto and kind of new emerging markets of technology. They find themselves in that camp, and it's a beautiful thing. I think we will have much more free time as we're starting to see. And it's a matter, I think, above all, as you were mentioning about UBI, and you were mentioning as well about people having more free time, teaching people from a young age to take these assets of potentially an income coming in from some kind of service, and also your time, and making the best of it, and making the best use of the internet and all the resources at your disposal that practically give you free information. So I'm excited about that. And also I appreciate that you have your passion for music. I'm curious, I wanted to ask you, out of all the songs you've played, I've listened to some of them myself. You showed me some, and then I've listened to some of the piano works that you do. Awesome stuff, Chris, as someone who played a little bit of piano when they were younger. Yeah, I mean, I'm curious, what would you say was the one song you want everyone to check out? And I'll leave it linked down below for those who might want to listen to it.
They could go right to my YouTube and they could check out my waterfall video.
Waterfall's
I love
good.
waterfall. There's a lot of key changes and things going on. It was voted most likely to be the major title theme to a major motion picture. This is
Really?
by a big panel of producers and directors. This is some years ago, and I was like, "This is great. My dad wants to orchestrate it, and I'm all open to all these ideas. It's just a question of time. Time is always the most valuable commodity, I say, and so all these things I'd love to do in music always get put on the back burner.
Yeah.
It's a high, I call it a high quality, high class problem to have. I tell everyone, surround yourself with high class problems. In other words, whether you pick A, B, or C, you're in great shape. It's just that choice C, that being music, always gets the short shrift and gets put on the back burner. But I still compose. That's in my blood. I have my piano. There's pianos here actually. They wanted me to play later, so I might do that. Play impromptu wherever I go in the world. It's fun. My album is called Teardrop Rain. So if you Google that and you can pull up there's 21 original compositions on it. But there's a lot more music. I've composed close to, over 40 tracks. And I haven't had the time to release another album, even though what people say, I've done all the hard work. Well, I've done the pleasurable work. I've composed everything, and it's good for, I guess, another 2 albums. I just have not had the time to put it together, and it's a lot of work to get it launched properly and everything. So, whenever that happens, it happens. Maybe I'll get a musical manager or something so that it doesn't take up my time. If that gets done, it gets done. Great. But it's been a lot of fun, performing around the world wherever I go, because there's pianos everywhere. And speaking of which, the waterfall track was done on it's called "Play Me, I'm Yours," and they scatter pianos in different cities around the world. And so I was recorded performing in all these different pianos around London, and that became the forefront video for the whole "Play Me, I'm Yours" concept. So they had all these different websites, and that video was featured on there for about a year and a half or so. So yeah, it's great. I love when you do something that becomes something that other people can enjoy, and then that's what it's about.
Well, I mean, Chris, I'm not only happy to hear that you stuck with it as someone, like I said, who had played it when they were younger, and I never really stuck to it. I mean, I could go back and play a few tracks. It's good to see that you're still sticking with it, even through all the things that you're tackling right now. And along with that as well, I want to say that I appreciate what you're doing in crypto. I appreciate what you're focusing on in regards to asset-based tokens. So I know you've got a lot on your schedule. I know you've got a lot that you're tackling over the next year and you're keeping up with. But hopefully, above all, I can keep up with you and hopefully have you back on the podcast, and we can talk about some of these things and some of the new developments you have going on. Definitely want to stay in contact, and hopefully, if there's new things arising and stuff, share it with the world. It seems like you're doing a lot of great things, and it's cool that you've pivoted in so many different directions. I don't think I've met someone who's gone from doing music and nuclear physics to trading and crypto. I mean, that really speaks to something. I think more than anything, it's a character of being open-minded and always, again, as you said, in a speculative nature, seeing, is there opportunity here for me to grow as an individual? And again, props to you on that. I mean, lots of great success on your end.
Well, thanks so much, Nick. I've really enjoyed this interview. It's actually, I gotta tell you, it's one of my favorites. I've done hundreds of these in the world of stocks. I've done much fewer. I've only a handful in crypto because I finally decided to start doing these again in the crypto space. But I really I love the energy of your podcasts, and I think you're doing wonders for the whole crypto community. So I'm not at all surprised that you've had the success you've had in the time you've been running this. So keep going, and the sky is just the beginning.
That's awesome, Chris. Well, I appreciate it. And if you guys are interested as well, I'll leave some links down below for Chris's material, like, for example, his website. I'll leave his YouTube channel down below. You can actually watch his recent lecture to kind of go back on some of the things we were talking about from the MoonTech conference. They've got that uploaded so you can see his presentation, learn a little bit about his perspective on Bitcoin, and definitely check out Chris's music. He's got some good piano music videos out on his YouTube channel. And I'm glad to hear, again, I'm glad to hear you're sticking with it, Chris. I'm someone who, I like pianos. I love kind of traditional music as well when I get to listen to it. And it's good to see people are still caught up in the world of learning instruments and more, I guess, kind of classical traditional music in that sense.
Thanks so much, Nick. It's been great.
And that's going to be it for this episode of the DashCast. Thanks so much everyone for tuning into this episode, and if you liked it, please give it a thumbs up down below, as well as sharing it with a family member or friend. And if you have an idea as to who we should have on to the next episode, please leave a comment down below. I love getting feedback from you guys. I want to go ahead and give a real quick shout out back again to Chris for coming on to the DashCast. It was not only great to continue our conversations from back in Estonia, but along with that as well to have a little extra time to learn more about him as an individual, as well as sharing his story and his future ambitions in this bear market of cryptocurrencies. But to put it simply, I'm definitely looking for the day we can have him back on to the DashCast. Once again, our sponsor for this episode is the Dash Report. For those of you out there who tend to find that you enjoy my rambling on financial markets and my daily updates, I think you'll really enjoy the value that we provide within our newsletter. As I stated before, not only do we cover a wide range of different markets within the newsletter, but along with that as well, through our bi-weekly webinars, we'll sit through and talk about the changes in regards to potential trades, as well as key factors that are playing a role across a variety of different markets. And for those who subscribe on an annual basis, you'll be able to get 33% off on your order.